to the Valuation Master Class case study, where you'll learn about interesting stocks and how to value them. What's interesting about Meta is that it's trading at a 36% discount to the S&P 500. This is Andrew Stotz of Valuation Masterclass. Let's get started. This information is for learning purposes only. This is not investment advice or a recommendation. Meta is in the communications services sector in the United States. It's a social media giant with 3.5 billion active users through Facebook, WhatsApp, and Instagram, one of the world's most valuable brands. There's three things to know about this company. The user base might have reached maximum, so focus on price. Reality Labs squeezes profits, but could turn big in the future. And competitors grow out of nothing to challenge its dominance. Let's review some key statistics. There's 60 analysts covering the company, and their target price is $350 US. That is a 59% upside. They have it as a strong buy. The PE ratio of the company is at about 16 times. It's not paying any dividends. My estimate of value is at 339, about a 54% upside. If I was giving a recommendation, it would be strong buy. Now, sales. Let's look at the revenue breakdown. Advertising is 98% of the revenue, both Facebook, Facebook Messenger, WhatsApp, and Instagram. Virtual reality is 2% of revenue. The breakdown by region, well, the US accounts for 47% of revenue, Europe 25%, and APAC 18%. Now, the price turned bearish, but could turn around soon. In the first 3 quarters of 2021, Meta saw a strong bullish rally, but before its price has been corrected downward by the end of the year. In January, Meta saw its largest intraday drop in its share price, down 25%. However, recently the share price started to rebound and could go further. Volume RSI has been neutral recently, not providing any clear signal. Now, what did actually happen to Meta's share price? On the 3rd of January, Meta's share price dropped by 25%, equaling around $230 billion in market cap. Here's what happened. Meta reported a decline in daily active users for the first time. Apple update on ISO devices makes it more difficult to track consumers, dragging Meta's ad revenue down. And there was a $10 billion loss from its new Reality Labs business unit and lower management profit forecast for 2022. All those things came together and basically said the market didn't like it, down 25%. So what's the story here? Well, number one, the user base might have reached maximum. Focus on price. I'm looking at a chart where I look at North Pacific, Asia Pacific, Europe, and the rest of the world, and look at the trajectory. North Pacific and Asia Pacific have been flat for a long time. The growth is happening in Asia Pacific. And the pace of the new users also is starting to stagnate, even in Asia Pacific. With over 3.5 billion active users on its platform, Meta covers more than 65% of the internet population. Now, I think it's close to saturation as far as the number of customers. I always like to talk price times quantity when you forecast the revenue of a company. Quantity here is at its peak. In fact, one way of looking at it is they have a 76% market share. All right, here's a table I show that came from ourworldindata.org. And it basically shows that about 700 million people live on less than $2 a day. And I would estimate another maybe 16%, or about 1.3 billion people live on $2 to $5 a day. And about 1.4 billion people live in China who don't have access to Facebook. So my rough estimate of the market size for Facebook is 4.6, which is 4.6 billion people, which is 8 billion people minus the 700 million that are living under $1 a day, minus the 1.3 billion that are living on $2 to $5 a day, and then minus the 1.4 billion Chinese people who don't have access to Facebook. And that leaves us with about 3.5, or it's about 76% at 3.5 billion customers, 76% of the 4.6 billion unbelievable. And there it's so different when you compare that to, let's say, Tesla. Tesla is all about growing volume. Facebook is all about growing price. And that's why I ask, will Meta get more of your cash out of your pocket? Now, Meta should focus on getting more revenue out of its users. The average revenue per user, or ARPU, has been steadily increasing over time and could drive further growth of its advertising business. There's still large differences across regions, of course. In the US, ARPU has risen to about $41 in fourth quarter 2021 compared to $13 in Europe. So think about that. Meta is getting $41 of advertising revenue out of your eyeballs. Asia is even lower with an ARPU of $3.6, which means there could be a lot of growth there in the future. So here's how I incorporated this story in my forecast. Here's a revenue breakdown going back from 2019 up to 2024. And I looked at the active users, 2.8 billion in 2019, and forecasted them to 2024, which would be up to 3.9 billion user. And then I looked at revenue per user per quarter to try to understand what that would be. And then I estimated that that would increase. So the first part is I expect low growth in the active users as Facebook starts to hit the ceiling there. And then the company needs to shift to raising prices instead of growing quantity. I can do so because it's still the dominant social media platform. So it should be able to raise prices. Now, let's talk about Reality Labs. The company's strategy is to transition from a social platform into an entire virtual world called Metaverse. The main concept is to take the digital experience to a new level. Therefore, Meta has created its new reporting unit called Reality Labs. Its products range from virtual reality headsets and development of games, smart glasses, presence platforms, and work-related applications. Now, operating loss from this new business unit could worsen further. In 2021, Meta recorded a $10 billion loss from Reality Labs. And that's just getting worse, basically. And still, Meta continues to invest heavily and is willing to accept losses from this unit over the next 5 to 10 years. In fact, my estimate is that it's going to go from about 10 billion loss in 2021 to about 15 billion loss in 2022. Now, it has the capacity to bear these losses compared to smaller players. Meta places a risky bet on the success of the Meta universe, and it's all about what's happening with Reality Labs. So if the company gets it right, the share price could skyrocket. So here's how I incorporated this story in my forecast. What you can see here is Meta's R&D investment aims to establish its new business unit as the next big growth driver. And so Reality Labs, we can see the spending that's been happening in Reality Labs. First, it was $500 million US in 2019, 1.1 in 2020, and 2.3 in 2021. I've taken my estimates combined with the management forecast to say that the revenue that they're going to be generating is going to go from that 2.3 up to 4, up to 10, and up to $20 billion. And that also helps me too to understand the margin. Here we can see the investment is long run bet as profits are likely to be squeezed in the short run. So what's happening is that the net margin of Facebook or Meta before Reality Labs is about 33%, which is already huge net margin. The average company has a net margin of about 6%. So it's already a huge net margin, but I think that net margin is going to come down to about 29% by 2024 because of the losses at Reality Labs. Now, competitors grow out of nothing to challenge Facebook's dominance. Now, this chart that I'm showing shows Facebook, WhatsApp, and Instagram, its three platforms. It still owns 3 of the 4 most used platforms on Earth. However, new platforms try to differentiate themselves from Meta and scale pretty fast, like TikTok as an example. It was founded in 2017, and now it's got more than 1.1 billion users. Also, in particular, Meta fails to attract young users. And in fact, one of my young friends said to me, Facebook is for adults. So that's a whole demographic. If Facebook loses, it could be a risk. I also would highlight that Telegram, out of all the kind of privacy related software, Telegram is the one that's made it farthest up with about 500 million users. Now, copycats are nipping at their heels. I just show a chart here, two things. Even I got put into Facebook jail. I show you here you can see that Facebook would not allow me to go live for a period of time because I didn't follow their rules about whatever their political things were that they wanted me to say, or things related to health and disease. So I got banned for 1 month. And what's happening is when Facebook is doing that, people are going to these other sites, Gab, Locals, Getter, Telegram, and Rumble, and BitChute, and all of these places, Parler, these are growing. But the fact is, even all of them combined have a hard time making a dent in Facebook numbers. So now the recent negative news could make Facebook or Meta attractive now. What we can see is that in 2022, the trailing PE dropped close to 2 standard deviations below its historical average. And with the PE now 16 times, it even trades cheaper than the US average of communication services companies, which is about 19 times. And in fact, the US S&P trades at about 26 times, or sorry, 36 times, 26 times, which is a 36% discount that Meta's trading out. So I believe that the market, the disappointed market, has punished Meta, but probably too much. Now, let's look at the forward-looking PE and see how it doesn't look that expensive. What I've done now is just continue on with the table that I was looking at. I've got the net profit. I've got the market capitalization. And then the next thing we do is try to calculate the PE. And what you can see from this is that 2022 PE is about 16 times, and then it goes down to 14 and 12. Ultimately, what you can see from this is that Facebook Meta is not that expensive at all, in fact. Remember, you can scan this QR code to go to the valuationmasterclass.com blog to download all full case study reports for free. You can just go there right now or click the link in the show notes. Now, let's review the FVMR scorecard. It measures a stock's attractiveness relative to all other companies. And this attractiveness is based on 4 elements: fundamentals, valuation, momentum, and risk. And the scale is from 1, which is best, to 10, which is worst. And here, when we compare Meta against 2,160 non-financial companies in the US, it's kind of average, really. It's not that super impressive. Let's look at the fundamentals, though. And here we can see the net margin is pretty massive at about 36% right now. It's a crazy net profit margin. Return on equity is about 32%. So very strong on the fundamentals. The only thing that's holding it down is the asset turnover, which is improving now. It's up to 71. It was as low as 54, which means the amount of revenue that they're generating from every 100 in assets that they put into the business. So recently I created a short online course explaining my FVMR investing approach. I usually sell it for $97, but for a limited time, I'm offering it for free. Just scan that QR code or go to the links below. Let's look at the forecast. There's 60 analysts covering it. They've got a 59% upside. Most analysts have a buy recommendation as they see some massive potential. We do have 2 sells, 1 sell and 1 strong sell. So most analysts are optimistic. Consensus has already incorporated a significant drop in margin due to the loss-making Reality Labs business unit. And so they're seeing margins going down to about 27% from as high as 33% in 2021. Now, let's look at the P&L. It's in line right now. I'm forecasting about $39 billion US in profit. And of course, that should rise in 2023. And it's still going to be held down by Reality Labs. The next thing is that we look at the balance sheet, the assets of the company, and we can see that Meta announced to continue investing heavily in data infrastructure and development of new virtual reality products. Therefore, the net fixed asset investment is probably going to continue to grow. And also, it has a large $50 billion of cash, equaling about 1/3 of its total assets. That is a hell of a war chest. Liabilities, well, Meta is net cash and has very low debt, which is quite typical for fast-growing companies that are highly profitable. And the ratios, you can see return on equity now actually kicking up to almost 60% for our calculation of return on equity versus an ROE of 18% overall for the industry. The EBIT margin is at about 35. Remember that EBIT margin globally for the average company out there is about 10%. So at 35%, it's very high. In the long run, the contribution of metaverse business could bring profitability back to previous heights. Now, if you want to learn how to value companies like this, check out my 6-week online Valuation Master Class Boot Camp. Class starts on March 7th. You'll learn practical valuation skills. You'll get access to the tools and tips that I use. You'll join a group of inspiring, like-minded financial professionals, and you'll get a job through my network of thousands of financial industry leaders. Just scan the QR code here. You can save $400 until February 28th. And you just go to valuationmasterclass.com/bootcamp, and I'll see you there. Let's look at the valuation. I'm going to review the A Stotts Investment Research Stock Picking Checklist. It was inspired by Peter Lynch's book, One Up on Wall Street, where he talked about 10 baggers, which are stocks that go up 10 times. We did extensive research on 10 baggers and found 9 factors that drive long-term share price performance. So now let's look at Facebook or Meta to see if they have the potential to be a 10 bagger. First is management, that they have a commitment to growth. The answer is yes. Meta saw 30% revenue CAGR over the past 5 years and is looking for new growth areas. Number 2 is growth. Can the company grow at double digits? Yes, this is good. Virtual reality could become the next big thing. We don't know yet, but they are betting heavily on it. Number 3 is margin. They have a high gross margin. Gross margin is one of a kind. Number 4 is predictability, meaning there's minimum non-core expenses. That's good. Net profit has been stable and growing. In some years, lawsuits slightly drag those profits down. Number 5 is intensity, meaning sales grow faster than assets. Here it's moderate because there's heavy amount of investment in data infrastructure, but sales could also skyrocket with Reality Labs. Number 6 is conversion, that the low cash conversion cycle. This is good. The cash conversion cycle here is negative. Because of a tech company tends to have no inventory, and so that usually makes cash conversion cycle negative. Number 7 is cash flow. Consistently positive cash flow. That's very good. Consistent and strong operating cash flows. We're able to cover all of their investing cash flow. Number 8 is capital, that they have access to capital. That's good. Meta is net cash, $50 billion. And number 9, reasonable valuation. And I would say moderate to getting close to good. It trades on a PE that's lower than actually the sector and definitely lower than the market, but with a much, much higher ROE. So is it a 10 bagger? What's the potential? I would say you've got a 5 bagger potentially here. Free cash flow. Well, Meta has delivered strongly on cash flow in the past and expects free cash flow to rise in the future. And we're forecasting that it goes from about $29 billion in 2021 up to $34.6 billion in 2023. Just the CapEx costs and all the different investment costs are always going to be small here relative to the NOPAT. So I expect similar revenue growth compared to the consensus. However, I'm a bit more optimistic with regards to the margin in the long run. Meta's ability to increase price for ads could offset the losses from Metaverse segment more than expected. In the free cash flow valuation, what I'm calling the cost of equity is about 11.5% and a WACC of about 10.9 because they don't have much debt. And then finally, a terminal growth rate of 5%, which is my maximum terminal growth rate. You could bring that down just a bit, but I'll go with the maximum. And that gives me a upside of 54% and a price of 339. The upside in a bull case could be up 67% and in a bear case, 41%. So a lot of upside there. Let's look at the world-class benchmarking scorecard for Meta. We identify a company's competitive position relative to global peers, and we use a composite rank of profitability and growth called profitable growth. The scale is from 1 best to 10 worst. And here we can see that it's consistently best in class when compared against 270 large consumer services companies. Meta has ranked number 1 in profitable growth for 5 periods in a row. And that's due to a massive level of profitability and a pretty steady growth. Growth is ranked at number 3, which is above average growth. What are the risks? Failure to attract young people to its social media platforms. Rising competitions that's growing out of nothing. And Metaverse could just be a bubble waiting to explode. And also there's regulatory pressure that they could face. So the conclusions are high pricing power could offset slowing pace of new user additions. And investment in Metaverse is risky, but could become a double-digit growth engine. Massive ROE makes it an attractive play. Finally, I want to end by by asking you the question that I started off with in the beginning. Will Meta get more of your cash? Because if it can, it means ultimately that its ARPUs are rising and therefore price is rising. So I see some comments. I'm just going to look at those for just a second, and I'll make any comments about them. So the first one comes from Michael, Dr. DeFi Roberts. He says, wasn't a lot of the downward movement because Pine funds and some billionaires pulled out? Actually, I remember reading something about that, but that could be another factor that pushed it down. And again, that's also one of the reasons why it may have overreacted and why it could be attractive now. Let's look at the next one. Satawat says, would you place your bet on the success of Metaverse? If so, how long do you think it would take for it to skyrocket? Well, I think with that much money, these guys got to make something of it. I don't know much about the Metaverse, but from what I've been seeing, there is potential there. So I would make a bet on it at this point. That someone else said it's 7 p.m. It's late. I'll watch the replay. Great. All right. And Tada says, awesome. Well, if you've got any comments, please put them into the notes below, into the comments below. I'd love to hear your thoughts on Meta, and will Meta get more of your cash?